Good morning, good morning. Thank you for coming to us live from TalkVisual305. We're coming to you live from downtown Homestead. I have my esteemed friend on the right and I have my esteemed friend on the left. So I wanted to say good morning to you all out there. Please like and subscribe. We're downtown and we're ready for you. Julio, what do you got?
We got a special guest in the building. This is Homestead's talent. I'm telling you, when Homestead has talent, this is a prime example of what I'm talking about. Homestead has talent. Good friend of mine, William Ledesma. He is the principal over at Bold Mortgage, I Will Loan. He's a mortgage broker. Whoop. He was named top 40 of the most influential mortgage professionals, 40 under 40. He was also NAHREPS in the top Latin loan officers. This guy, when I'm telling you, he's got a story that will inspire. We are going to listen to that story today. He's going to tell us what it takes to become successful in the mortgage space and just being a great human being. Please help me welcome William Ledesma.
So I need, you guys have amazing energy. I gotta keep up with that.
So good morning, and welcome to our podcast. I mean, we like to bring persons on to leave crumbs for the next generation. So we wanted to say welcome. We wanted to give you your digital flowers to say, hey, we see what you're doing in the community. We see what you're doing out there and how you're helping others. But we wanted to bring you on and says, thank you for doing what you're doing. So good morning to you.
Appreciate you, man. Good morning to you guys.
So
William, man, listen, William is everywhere. If you guys haven't seen him on social media, you're missing out. This guy, I'm telling you, he is at all of the events. And what's interesting about William is that he doesn't just start with, hey, I'm going to sell you something. This guy connects on a human level. You can talk to him about everything in life. And this guy, with the experience that he's had and with the contacts that he has been able to connect with, his craft is at another level. And I appreciate how you move, William. What kind of started, what inspired you to start connecting with people on that level?
So I think it's more based on who helped me, right? When I was starting this business, well, I started 20 years ago, but then when I left and came back right before, I was doing MCAs. Like I did merchant cash advance. I was talking to businesses, and I saw how they're getting screwed over, and I just felt very negative.
Right.
So I said, I can't do that. I had to go into something I love. So I decided to do this, and I wasn't making any money. 6 months without a check, and the first people that kind of gave me a chance was people I was helping out with their business.
Okay. Right.
So I was kind of reaching out to people that I'm like, man, I can help you out with that. Hey, I can help you get business. That's easy.
Right.
And as I started doing that, you know, the reciprocity started coming in.
Okay.
And I saw that kind of niche. I'm like, if you have a business, if you're self-employed, if you do whatever, that's easy for me because I can help you in your business. You help me in my business, and that connection started very fast.
So when you worked some of the odd jobs that you did early in life, you were always thinking, okay, this isn't it for me. I want something else. So you're always looking at things from a different lens, and you're saying, what's going on behind the scenes there? Why does it work that way? Has that helped you?
I think that to clarify on that, every job I've ever had I've always seen it as I'm the owner.
Right.
Okay.
Like this is like I could never sit in a particular office and not think how can I not make it better, or just it was never a 9 to 5 to me.
Okay.
Every single job that you know, if you know me out there, call me out on this. I have always worked more hours and harder than anybody else at any job. If I work for you, I am your best employee. And it's not because of you or because I like you. It's more because of me.
Okay.
I like to be a part of that. I like to feel like I contributed something. So yes, to answer what you said, I always looked a little bit further. How does that work? How is this made? Why, you know?
Right. Yeah.
And that helped me to translate it into even other jobs.
Yeah.
So you were always curious.
Yes.
Which was always that's always a feather. Being in an ownership chair, you always kind of look at when a person come on board. Same feeling when you get involved in a job and you say, you know what, it's not just a job for me. I don't care about the clock in. I care about how can I make it better. So keeping it clean, they can organically see that you're different.
Yeah.
And that's a lot of plus.
Sometimes you got to be a little careful with that because your coworkers might say, oh, look at this guy. He's going 1,000 miles an hour here.
Slow down.
He's making everybody look
I
bad.
have a story of that. So when the market crashed, I was in mortgages.
Okay.
And I left and I'm like, okay, where's the natural transition where I can make money right now? I'm like, well, everybody's hurting. There's going to be collections everywhere. Let me go to collections, right? I tried to get a really good collections job and they're like, you have no experience. Go find experience somewhere else.
Right.
So I went to a law firm and I started there. My first week there, my co-workers were like, hey, slow down.
Slow down,
Slow
man.
down.
You're making us look bad.
You're making us look bad, and they expect all of us to do that. And I was like, I have kids.
Yeah.
Like,
You got bills.
This is the only speed I know.
All in.
I'm all in.
That's it.
And very soon, I got promoted. And when I quit, they were like, no, we want to give you like. I'm like, dude,
Right.
how is it somebody knows nothing about your business, you come and take over that business just because of the sheer effort?
Right.
Yeah.
Yeah, and that's always a plus, man. So tell us a little about yourself.
I mean, you guys did a great job. Well, my name is William Ledesma. Obviously, you guys know that. But what you guys might not realize, I am Colombian. My background is Colombian. I'm
Bogota, Medellin, Cali.
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 Cali,
Okay.
yeah. So we know how to dance.
Oh.
My wife is Cuban.
Okay.
She's Cuban American. So she's tough
That's it.
and beautiful.
Don't mess around.
I have 3 kids. They're in cheer competitions. My son isn't doing anything as far as cheer,
Right.
more into gaming. And I am very, very, very into positivity, motivation, and sharing that with other people.
Inspiration, man.
Right.
I look at you as an inspiration right now. I mean, your story is really inspiring. I'd like the audience to know, because Homestead is our town, man. Homestead is our town, and Homestead is on the brink of becoming one of the premier cities in Miami-Dade County. We're not already there, you know, but
right.
how did you make your way to Homestead?
So I think just like anybody else, at some point or another, other places were unaffordable, right?
Yeah.
So I was living in Kendall. I actually bought my first property at Homestead in 2009.
Okay, that was a good time to
Yeah.
buy.
It was a great time.
It was in the low 100s?
That was 104,000.
104.
But I mean, to me, it's a funny story. Hopefully, you guys find it funny. So I worked my way up down to Homestead, right, looking at properties.
Yeah.
Right. And we wanted something that had a little bit of land. I'm like, I wanted a boat. By the way, I still haven't bought a boat.
You
I
may
got one
know
for
a
sale.
We could work something out.
That's it.
So we see this house that it didn't have AC, it had broken windows, but it had like the lot, and the price was 104,000. We had made an offer, and they said no because as a broker during that time they didn't trust him.
Yeah.
And I said, look, but I'm an expert in this.
Yeah.
I'm doing my own loan. I got you.
right.
They said no.
You're like, I'm qualified
Yeah.
to
Right,
buy
right.
this house.
And then they were
they
like, no.
rejected?
They rejected. They took an offer from Bank of America. Somebody
Okay.
came with Bank of America, and I said, okay, cool. They even told me, hey, if you go to Bank of America and they pre-approve you, then
Right.
whatever.
Right.
And they took somebody else's offer. I was like, look, babe, it didn't work out for us. We looked at some other houses, whatever.
She probably didn't like it anyways because it
No,
was.
no, she liked it.
Okay.
She
All
liked
right,
it.
all right,
We
all
really
right.
did. They came back to us like 40 days later and said, hey, you still want the house? I'm
Right.
like, yeah, I want it. Well, now we're going to give you $3,000, 3% seller credit
What?
or whatever. And I'm like, okay,
What
cool.
the hell happened?
So I'm like, because they realized they knew nothing about buying a property that needed repairs.
Repairs. Ah.
Right? So the funny thing, I did a 2 or 3K loan. I did a mini K loan actually. And ended up with Bank of America anyway.
Right. They bought the note.
They bought the note anyway. And I closed it in 21 days, you know.
Well, tell the audience what a 203K loan is, because a lot of people don't know what that is and the
Right.
benefits that it brings.
Well, this isn't about real estate, but obviously I'm always
Right,
involved
right.
here. So a 2 or 3K loan is a loan that the FHA backs up, and it allows you to buy a property that needs repairs, and it'll finance those repairs for you.
You hear that, guys?
Right.
It'll finance
Finance
repairs. You have no kitchen, you have no bathroom, you
No-
need floors,
no AC.
whatever. You cannot get qualified for a regular FHA loan when the house is not livable. But then the mortgage industry has this particular type of loan that allows you to buy that house, and they will finance the repairs for you.
Yeah.
Right.
That's a no-brainer
That's a
sometimes.
win-win there.
So I bought the house, and honestly, we had a plan. We had a plan to just live 3 years and then move back to Kendall. That was the plan.
Right.
I said, baby, we're going to just live here. We're going to do whatever. By the way, before this, I had already decided I would never rent again. I'd never rented. I had to rent for 6 months, and I said never again, right? We moved in. We fell in love.
Good.
Number one, our neighborhood.
Oasis.
No, before that was after. I was at Tennessee Estates first.
Okay.
You know, so I was in our neighborhood. Everybody looked out for each other. We had no HOA, so everybody was looking out. They were serviceable. My neighbor had maybe not public reality. He had a garage filled with like beer cases, and if I needed something, he's like, oh, just walk in there and get it. I got locked out of my house one day. I'm like, hey, he helped me out. They plant the trees. Everything, the community that I had just within that block was amazing.
It was weird for Tennessee Estates not to have an HOA because it was a new community. It was one of the first new communities not to have an HOA.
And no CDD.
And no CDD. That was strange, but that was cool. That was cool about Tennessee Estates.
See, not many people know that. Just so you know, I've been selling that's the dream that I was selling for a long time, and nobody really understood that.
Yeah.
No CDD, all the insurance credits, all the roofs after 2006, everything was like
Spot on.
Yeah.
But the community, the people. It was to a point that I was working a lot, and I wasn't there for like maybe 2 years straight. I was working like almost like you wouldn't see me, right?
Yeah.
And I walked the neighborhood one day, and a neighbor stopped me. Hey, what are you walking through here? And I'm like,
I live here. Yeah. Neighborhood watch.
Like, I've never seen you. I'm like, I've been here longer than you.
Crime watch, right?
Crime watch, right? But I loved it. We fell in love. What my wife liked is that everything was convenient and there was very little traffic. Yes, might be traffic getting to Homestead now, but within Homestead, everything's at a moment's distance. The kids' school, the kids' daycare, Home Depot, like Lowe's, like whatever you need is like right there.
We could use some improvements now. We could use some.
Well, we're
improvements,
growing.
but-
It's called growing pains.
Yeah, but we understand at that time that's how you guys felt, and that's what kind of kept you here.
Yeah, that's what kept us here. So we decided that we're gonna buy a bigger house, and we saw this house in Isles of Oasis, in Windward Isles. Funny story. Back in 2007, I wanted to buy this same exact house, but I couldn't because it had Chinese drywall.
Yeah, I remember the Chinese drywall days. I remember.
So I didn't realize that when I went to buy this house now, that it was the same house that I had, like, I don't know how you call it,
fixation,
myself. Like,
You manifested it.
I manifested it,
Manifested.
and I didn't realize they were the same exact house.
Wow.
I literally realized 3 years after I moved into the house and remodeled it that I told my wife, I'm like, look, do you remember that we had? And she was like, no. And I'm like, the staircase, the double ceiling, huge house.
Nice.
And she was like,
Right.
you know? So I see this house. It's really big, and for the price, it was like I bought it for $304,000. It was a foreclosure, and I paid $4,000 above appraised value, by the way.
Wow.
And it had 3 different floors, like style floors. It needed a complete remodel.
So it had Chinese drywall.
Right.
No, not when I bought it this time.
Oh, okay.
Right.
All
So,
right.
but
Taking it out.
that was something they had already done. Somebody foreclosed on it, and the person had already done a lot of the repairs. But then we moved into that neighborhood with an association, which I'm not so keen on. But now that neighborhood, the community, like I'm talking about, like I told you before, I left doors open, and people. This is when I first moved in.
Yeah.
I left the door open, and people, hey, you left your door open. They looked out for me.
Wow.
Hey, this, like now, like if I leave my kids there, my front door neighbor watches them. And I have Mike, who's one of my neighbors. He drives at 3 a.m. He's like an old Army veteran. He drives. He takes care of the neighborhood. The lady in the back, like Kitty. We know everybody by name. It's such a. What I like is a community.
Right.
So people typically only see that kind of camaraderie in the Keys.
Right.
You know, you would normally go to the Keys and people say, hey, you left your door open, or your car door's open in the Keys. And you found that here in Isles of Oasis. Let's give it up one time for Isles of Oasis. That's amazing, man. That's great. I'm glad. And that's another reason that you're still here, because sometimes people are here, but they go work in Miami. There is so many cases of people, talented individuals like yourself, that live down here, but they do a lot of, or the bulk of their business is elsewhere.
So I do that, but see, this is where me and you kind of agree, and we see it from different points, right?
Yeah.
I go and fish for business to bring back to Homestead.
Oh, I like that.
You get me?
I
Like
that.
my business is, my office is on Bird Road, right? I gotta leave.
Yeah.
But most of the people that I see trying to buy in Hialeah, Kendall, anywhere else, they're like, oh, I don't want to live in Homestead. It's too far. I'm like, I live in Homestead.
Right.
Oh, how long did you get here? And then they should see the other side, and they're like, oh, people like you live over there, people like this, that, like whatever. Like they're like, yeah, people that commute, it's not that bad.
No.
And then they move into Homestead. They buy into Homestead. So that's kind of what I'm doing. I'm bringing people.
You're bringing them in. That's it.
You know?
Well said. Well said. So, what are some of the challenges you face in your space early on that you can share with our audience?
With space as far as mortgages, or
Yes.
So, look, I can tell you the biggest thing is it came after. Look, 2019 was one of my best years.
Yeah.
2019, I was good. I was primed. I was liquid. And I was ready for the market crash in 2020, which is what was really supposed to happen, right? I got to the end of 2019 and I had a conversation with my partner. I said, look, man, things are great.
Yeah.
people are complaining the rates are too high, people are doing this, but I'm in a great position. My trust factor is very high.
Yeah.
And I hope it sticks this way because I know it's gonna probably crash next year, and I'm ready for it. But a lot of people aren't, right? So I'm trying to position my team, my people to be ready for that. I start hearing people quit the game. Everybody's leaving. Loan officers, realtors leaving the game, quitting. Fast forward to like April 2020, right? April 2020, all those people that quit the game that couldn't hack it.
Right.
All of a sudden, I'm a top producer. I own my own. Oh, I don't want to work for nobody. I have my own thing. And I'm like, so this is the challenge. You have a lot of people who don't have the work ethic to thrive when they got hard.
Right.
And they're still competing for the business now. Now, I say competing not because they've earned it, just because they're throwing like things, garbage, and this is giving people a bad taste in their mouth. Oh, I went to so-and-so and he screwed me. I went to so-and-so. Those people that haven't fought through the many difficult years of real estate, they don't understand the ins and outs of real estate, are giving other people the bad name. We're here. Julio, how long you been doing this?
Since 2005.
Like, he survived everything.
Yeah.
Right.
I started in 2005 too. Don't get me wrong. I left for 3 years, but I've survived this. I've seen the ins and outs, and I can help you navigate this. I'm not going anywhere.
Right.
Versus there's a lot of people, the majority of people, I want to say probably 60% of the business are not in it, and they're not helping people the right way. They're just kind of trying to make a check.
Right.
And that's what it is. More the branding that real estate as a general has.
Okay.
So when you think of providing value to a customer, like you talk to a guy like Will, he's going to give you a plan, and he's going to back up everything he's saying because of the experiences that he has gone through. And he can look back and say, look, back when the rates were this is what was happening.
Right.
Now that the rates are this is what was happening. This is how I think I could help you best position your family for the goals that your family is trying to attain.
Right.
Because people might have different goals. They might be, thinking I'm just going to live here for 3 years and then go somewhere else.
Right.
Or, I might think about flipping this house, whatever the case may be. But when you talk to a real passionate professional, he's going to give you a roadmap.
Right.
Almost like if you're talking to, Tony Robbins or some sort of person that's going to really, really give you a map to help your family succeed long term.
Right.
Not, hey, let me try to give you the best rate right now, and this is what it is.
One and done.
And done. Then they never speak to them again.
Yes.
Well, by the way, Tony, I'm not trying to, don't put me in your category. Don't get me in trouble.
Don't box him in.
Don't box me in. Look, I do this thing where I do 6-month plans, 12-month plans, 3-year plans, 5-year plans, and 10-year plans with all my clients. Based on the conversation, about, tell me truly what's your goal.
Yeah.
What's your goal next year? What are you planning to do? Because most people don't realize this. Most people do not keep that main house for more than 5 to 7 years. In South Florida, it's 3 to 5 years, right? So what I do is that I give them a realistic plan, something that they could actually build wealth with their family, leave something, and we strategize. That's why if my return, what's the word I'm looking like? My return client is very high.
Yeah.
Very high. I do better on that than most people because I'm more of a business partner to you.
Yeah.
The moment you come into me, okay, you buy your house, all right, let me tell you how you get the next one, what you're gonna do, when you're gonna save it, how you're gonna improve your credit. And I get these random text messages, hey brother, after they bought the house, hey, I did what you told me, I got my credit to 800. Hey, I did what you told me, I got this additional funding for my business. I have a local person right now that when they met me, they were doing good.
Yeah.
But literally within less than 2 years of meeting me, they multiplied their business times 4.
So
Opened up showrooms.
They
and
10x. I always say 10x, right?
10x, right?
Yeah.
They meet you, their life's gonna get better.
That's
It's
it.
automatic because I can't help but help you.
So
Whether
they
it's-
elevate the minute.
Whether it's marketing, business, tax strategies, or whatever it is, like it's just my nature. I told you, I feel like I'm the owner.
That's
you
it.
told me you do T-Mobile. How can I help you get 20 more stores? You know what I'm saying? That's just
18th, by the way.
That's why I messed it up.
I don't want you to box me in the T-Mobile. All right?
No offense.
I'm so sorry. I
No worries.
apologize.
So where do you see the industry? How do you see it evolving from here? Obviously, you know what the market is today. Where do you see it going?
Look, I think that I see an opportunity right now. I think I see such a big opportunity, and people are about to miss it, right? So we're still in the process where sellers are still giving incentives. They're still fearful about the market,
Right.
and the rates haven't come down yet, right? So we're still kind of leveraging the buyers being able to negotiate and still be able to get a better rate. So understand our rates are amazing compared. Like when I started this, the average rate was like in the 8s. Now we're like in the 7s. That's the average rate. but the actual rates are so much lower than that. So much lower than that. And so you're in a good position to negotiate, right? Negotiate, get a good deal, and still be able to buy the house that you dream of. Why do I say that? If you were in the hot market, people were buying a house that they could, not the house they wanted.
Right.
Right now, you get to get the house that you want. You get to be a little picky and still get to negotiate the hell out of it. If I show you the properties I've been looking at, especially in Homestead, I'm like, they're all completely remodeled. They're all completely updated. They don't need nothing in them. And you're getting a deal, and you're getting seller credit, and you're getting this rate. I'm like, it's a win-win-win.
Yeah.
So where do I see it going? I see, depending on the neighborhoods that you're in, there might not be like growing as much as in the neighborhood. I see overall growth. But I see that those who take the opportunities now, this year, they're going to be better off than everybody else.
So you think it's a seller's market now?
I think it's a buyer's market.
I think it's a buyer's market. You know, that's the beauty about being with Avanti Way Realty. The technology that they have, it breaks it down like boiler room, you know, style data.
Right.
You know, so I went to Will's office and he's got this room just full of loan officers and computers, and it's like Wolf of Wall Street type of deal. So the information that we have will tell us, you know, if you're looking at a 3-bedroom, 2-bath, you know, the percentage of people giving contributions is 50%. So if you're a realtor and you're helping a new buyer, you can say, hey, you know what? I'm going to help you find this house aggressively. And matter of fact, I might even be able to get you some down payment money or some money for closing costs. And they're going to say, well, how are you going to do that? Well, the data's telling us that 50% of the sellers are giving contributions. And these contributions are $15,000, $20,000. So mortgage brokers love it when, you know, the sellers are giving contribution, because it makes the debt to income and that whole mortgage process a lot easier for them to get to get underwritten and get that clear to close, which is everybody loves to hear. So that it's good hearing it from you, Will, that it's a good time to buy, because the typical question I always get is, do you think the rates are going to come down? You think it's a good time to buy? And the answer to that is, you buy when you can, when you're ready.
When you're ready.
So I'm going to give you some context in that. Before I do that is, when people tell me that, do you think the rates? I'm like, I hope they don't. I'm like, the opportunity is while it's high.
That's it.
But the context is, everybody's biggest fear is when the market crashes. I was living in 2008, and I was firsthand seeing this. The market crashes, the values drop when the banks stop lending.
Okay.
So I would show up, and every Monday, like, oh no, now you need 5%, now you need 10%, now you need 20%, and literally slowly shutting down. Every single Monday, it was like, hey,
something else.
Right? And that's what started driving the prices down, right? Now, if the prices come down, and because the banks aren't lending, how are you going to buy it? Do you have the cash?
No, usually they don't.
That's I won't say the word, but that's the mentality that people don't have, that they think they know everything, but they don't understand that real catalyst is, if the lenders get scared,
that's when you got to be.
They can't lend. That means you can't buy.
Right.
Now, second part is, we've seen this routinely over and over and over and over and over again. Whenever it crashes, it spikes right back up.
So the crash hurts, but the ride up usually gets higher than it was before.
Way higher. Every single time.
Every time.
Every market, we've seen that.
Why?
We've seen that.
Because then the banks want to come and push whatever with the government backups or whatever. But then when the banks do that, they start getting creative and allowing people to buy. So now more people jump in. So why not get a good deal right before? If you're thinking it's going to happen, get a good rate. The property, you leverage the bank's money, and when the property skyrockets up, then you get to ride on that. Versus, hey, you don't have the capital to buy it if you can't finance it. Right.
That makes sense.
Well, I got a question regarding a strategy for people that are in decent jobs. You know, they have upward mobility and they want to pay off their house. Some people that want to pay off their house. I usually don't think paying off your house is the best thing to do, because, you know, you could leverage that money somewhere else. But people that say, oh, let me refinance, right? Refinancing for mortgage brokers is great. They all, you know, they do the same process again. Mortgage brokers get paid. But leveraging a home equity line of credit to pay off your house, do you promote that? Do you think that's a good strategy?
So that's called velocity banking?
Yeah.
Right?
And I've watched a lot of YouTubes on that. I've watched a lot of YouTubes on velocity banking.
So
you're certified.
As always, I'm going to give you like a little caveat before that. That mentality of paying off your mortgage, it's more of a like Hispanic in my country. That's what we did. You come here, I don't want a mortgage. This is America, people. We want that. We want good, healthy
Right.
debt. So I do not encourage you to do that. If that's what you want to do, I will tell you how to do it. And one of the methods is velocity. But before we even break that down, I want to tell you what it is. If you want to build wealth and you have the capacity to do something like this, I'd rather you invest in more and more properties, have
Right.
more income that requires less tax payments, right? You get to a point where you want to make more money, and then you get to a point where you want to figure out how to pay less to the IRS, and how to do it legally, right? So this how you do is by owning property. It's the biggest benefit is that I could make more profit and have a lower tax liability, right?
Right.
So we'll get into that later. That's another. We'll call you back to that. But now let's talk about velocity banking. All right. The concept is that a mortgage is amortized, right? So you're gonna pay interest on interest every month. That's how a mortgage is just built. Basically, you get to the end of the month, whatever interest you're committed for that month. At the end of the month, when you make the payment, you're adding that interest to it, right? HELOCs and credit cards are something called simple interest. You only pay for what you use
Right.
to the moment that you do it, right? So even if you get a line of credit at a higher rate than your mortgage, you're still actually paying less interest by the end of the year,
Right.
because you only pay what you use, right?
Right.
So velocity banking is a concept where you take everything that's on your line of credit and you pay in chunks to your mortgage.
Right.
Step one is that your monthly mortgage payment was never changed.
Right.
So now you start doing something called accelerating the mortgage. I mean, whatever's extra left on that monthly payment goes to pay off the first mortgage.
Right.
That means it starts paying so much faster because a bunch of money left out.
Excuse me, gentlemen. I just got to keep going. I just got to get some water.
And the second part is on the actual line of credit itself.
Right.
What you do is that you put your entire paycheck in every single month. Let's say between you and your wife, you make $10,000 a month.
Right.
You put it all in there, and then you start taking it out as you need to pay your bills. So even if you're not even paying anything extra to the line of credit, you're just rotating the funds through it in and out, you're still paying less interest on the line of credit. Therefore,
Dynamics.
exactly. Therefore, it frees up some of that. And then on top of it, you add like a little extra dime, $100, $200 extra.
Right.
Now that's going to pay off. So you're going to pay off the line of credit probably faster than the mortgage. Let's say you pay it off in 5-6 years. Then you use that same line of credit to do it again towards the mortgage. So you keep doing that cycle. Now,
You're giving us the goods now,
That's
man.
it. That's it, boy. Those gems
He's giving
are
us the
dropping.
goods now.
I like it.
Get your pen and paper.
I educate people on it. The problem is follow through on people. Because people, once they have this money, they make the wrong choices. Right. And once I tell them the structure, how to get out of it again, they don't follow it. Look, I do something similar, and I got the idea from this, especially when I worked at American Express, right? I worked in a department where I was teaching people how to use a card. So when you're like a high earner, whatever you want, how can I maximize? How can I increase? And I had to teach them how to rotate their funds, right? I'm like, rotate their funds. Now you have American Express paying for you. People are making money off American Express just by using it, right? And it's called rotating funds.
I didn't know that.
Yeah.
You've dropped it on me a few times too, Demetrius.
That's it.
Well, actually, it was in your world, right?
Yeah.
Where I had somebody who was buying cell phones in bulk, and then he was like, "I'll just buy them shipping," and I'm like, "I would just make my commission from the rewards." But the point, that's another conversation.
That's it.
This is going to be like a spider web. We're going to make a whole series on us talking.
it.
But the concept is, before I even get to velocity banking, I'm like, can you figure out how to rotate your own funds? So I do this with my clients now. Every single client gets this like, my phone's over there, but I just did this morning. I go through, I'm like, look, you want to get out of debt? Let's first start talking about rotating your funds. If you have, let's say, daycare, insurance, or whatever you could pay with a credit card, pay with a credit card. And then what you do is at the beginning of every month, you pay that credit card in advance.
Because you were going to pay it anyways.
Right.
You're going to pay it anyways.
Right.
But that rotating of funds does two things for you. Number one is you're not leaving the card maxed out the whole month. So now you have less interest because you didn't use the whole month. And number two, it starts improving your credit because it doesn't look maxed out. Right? And number three, there's two things. It gives you rewards if you have rewards, right?
Oh, yeah.
Like I take
Now
my
you can go on a
family
good vacation, right?
I do it every year. I like, I'm going to
That's
Paris
it.
in a couple of weeks, and those tickets were bought with my rewards, right?
And when you go to the airport, you get to hang out in the Centurion
Yeah.
Lounge
Oh.
and get all the fancy
That's
stuff and cool stuff, man.
That's
So-
it, man.
First, I teach them that. Once I teach them that, and I see that they could manage that, then all right, now we could apply the same exact strategy to your line of credit. So now you add this multiplier, because this is a wealth multiplier. The reality is HELOCs are a wealth multiplier if you leverage them right. If you leverage them wrong and you treat them like a loan, then you're in trouble.
Okay.
Right. That makes
Now,
sense.
segueing from that, I just learned something called accelerated depreciation on commercial buildings, right? And let's say your best year, the first time you had a breakout year, you weren't paying attention to taxes. And then at the end of the year, IRS says,
Right.
by the way, you owe $50K. And you're like, whoa, wait a minute. You know, and then you go, oh man, there's no getting away from it because it's a 1099. So then after you get hit that first time, you go, this is never going to happen to me again.
Ow.
I'm going to make sure that my accountant understands, all right, this is where I'm going to be in terms of earning. How do we reduce this tax liability? What is the best strategy? And the accountant starts to tell you all of the legal ways on how you can reduce that tax liability. But when I came across accelerated depreciation, and I saw this through a podcast that Grant Cardone was doing.
Right.
And he's like, man, the rich don't pay taxes,
Right.
like ever,
Right.
ever. And the way he broke it down was, he says, you know, you got normal depreciation on a commercial building over 39 years. You can accelerate all of that depreciation into 5, 7, and 15 years, and then you take that depreciation, and let's say you did owe 50 grand, you now have, let's say, 125K in depreciation that you could roll into the next year without having to pay taxes. I said, whoa, man, this is mind-blowing.
Yeah.
So I just learned this last year. So for those of you that have commercial buildings, take a look at accelerated depreciation, and might be a way for you guys to offset some of your income taxes.
Cover your ears. I didn't want nobody to know this, right? But it's not just on commercial buildings.
Okay.
All right. So you have cost segregation on properties, Airbnb, and things like that. You have the depreciation, and you have accelerated depreciation. Now, I've been preaching this for years, and this is what pisses me off. It really makes me upset about people going to cheap accountants. Lo barato sale caro.
Yeah.
Right.
If it's cheap, it comes out expensive. I will tell you, 90% of people bringing taxes, they're self-employed or have businesses, they're doing them wrong.
Yeah.
And I'm sorry, and I don't know who's watching this, and by all means don't come after me, but you're trying to hide what you earn, and with the new AI and what the IRS is doing, you're going to get screwed.
Right.
You might as well present everything you have and get with a good accountant that's going to tell you, look, these are the strategies.
Pay to play.
Yeah.
Pay to play. These
That's
are the
it.
strategies. Number one is, what can I do to get credits back?
Right.
There's different ways you can structure your business to get little credits here and that. Number two, what can I do to get depreciation back, right?
Right.
And number three, what is my 3-year plan and 5-year plan for my business? Because then this is how you say, look, am I going to go aggressive this year with depreciation? Because then what can I do in the future? You can't do it every year. You got to,
Right.
and there's a plan.
Right.
This is how I got the gentleman to multiply his business. I taught him about depreciation.
Okay.
And I said, instead of, this is you going back full circle. I said, look, instead of you leasing all these machines, all this equipment, you're thinking, if you buy it, your payment's less than what you're paying in lease.
Right.
But now your business has a depreciable asset.
Look at that, man.
Like,
Look at that.
this is how I educate entrepreneurs, so many people, because I'm like, I know these secrets because I'm tight with my accountant.
Well, but most people don't understand depreciation. They don't even they don't come across that word often, right? And then I didn't know what cost segregation was.
Right.
But my buddy Masood at Cal Engineering, I mean, this guy in,
So why
in
did you
just a
think
few
your
minutes.
your current accountant didn't tell you that?
Well, I think what
Did he
happens,
not know?
if you've been with your accountant, let's say for 20 years plus, right?
Right.
It becomes a routine for them. You
Yeah.
send them your bank statements. You create a Google Drive.
Right.
And then they go in there, they get your bank statements and pretty much what your business does, your P&L.
Right.
And they go, okay, boom, here it is. And that's it.
No
But
looking.
You want them to say, hey, can you please guide me on some tax saving strategies, how I should structure my business? Because as we're growing, we're adding all these other layers to our business, but there is not a tax consultant that is telling you this is the proper way to do this.
So
maybe
think-
your wife should be an employee,
Right.
Or
Do you
maybe
think we should go to a tax attorney then versus a standard accountant, or you?
I'm not sure. I'd ask him.
I don't think so. I
No?
think that, so I have a colleague who's a tax attorney. I have colleagues that are CPAs. And my accountant is an enrolled agent. I prefer enrolled agents. They're a little bit more aggressive with things. Enrolled agent is like an accountant that can speak on your behalf with the IRS.
What do they call rogue agent?
Enrolled agent.
Oh.
Enrolled agent.
I was like rogue.
Sorry,
Where you
I got a business on it.
That's
But
it.
what I was going to tell you is it's called tax plan. So the difference between what you're saying and what most people are doing is that before I do my tax, like normally November, December,
Right.
I get with my tax accountant. I say, this is what I'm already getting close to the end of the year. This is what I'm doing. And this is where I'm at more or less. What should I do so I don't have to pay taxes next year? And then I also tell them, look, my 3-year plan or whatever, so they know where I'm going. And I like, let's open this up. Let's like open up this other corp. I do something where I have to buy a property by the end of every year.
Right.
That's the goal.
Right.
Whether it's to buy and sell or to keep, it doesn't matter. I have to buy something by the end of the year. That's how I've set my taxes when they get really, because some things, I'm mostly a W-2 employee,
Right.
so I can't get away as much as some employed, but the trick is to buy properties. By the way, I keep saying buy properties, right?
Right.
I think that's another business in itself, because if I had heard this podcast a year ago, I'd have been calling you, say, hey, how can we get into tax planning?
Right.
How can we get? So there's a ton of small business owners out there that need tax planning before they actually do their taxes.
100%.
Yeah.
100%.
And they would save so much money.
And not going to just the guy in the corner.
Yeah.
I agree.
So I'll tell you how I ended up there. So I got audited 2011. I got in 2011, and I was right. My accountant did something cheesy to get me whatever, and I fought the IRS on this, and then I would have won.
Okay.
But they paused me. They said, like, every accountant, everybody, every CPA, people used to work for that, something, don't.
I wouldn't want to fight with the IRS.
They said, no, let it go. Pay the fine, pay the thing, and just move on. That's what everybody told me. But everybody, I went to, like, if you told me, I spent literally 2 years looking for the best of the best to do this. And nobody gave me a attorneys, everybody. They were just trying to, oh, here's a fee, here's a check, whatever. I ended up with this accountant who was like, look, man, we got to do this. We're going to get over this way. And I have a plan for the next coming years. This is what you're going to do. Trust me, like, you're good. That's how I ended up with my person. I ended up having that conversation with them because I'm like, they took the time to give me an actual plan, right? Now, second thing is, it's not as scary as you think. Like, you're like, oh, you got audited. I'm like, dude, all they did was literally send me, he was like, this is incorrect. Here's your new taxes. Sign them, send them back, and this is what you owe. There was no conversation.
Okay.
Right? And at that moment, if I wanted to dispute it, is a different thing. If I wanted to accept it, it wasn't like, it was like,
Right.
here's your thing. Boom. I was like, okay.
It isn't what people think, that the IRS comes barging into
Right.
your place and they're opening up all the cabinets and ripping your stuff
What's
out.
this for?
Well, they are
Right, they are
hiring field
agents,
people
right?
now.
Yeah.
So I
All
don't
right.
know. I don't know.
Will, before we wrap up, man, give us something that really set you back in life and how you bounced back. How you didn't it didn't depress. I mean, everybody gets depressed and we go through real dark times. How did you bounce back?
I mean, obviously, the easy one is in 2008, right? When the market crashed. Look, a couple things happened to me. In 2007, I found out I was going blind for my left eye. Like, I lost vision,
Okay.
and I had to go to a couple surgeries. So I go to Colombia. I go do my first surgery. When I come back, I land. My boss says, hey, brother, this is early 2007, like January. He was like, hey, the market
Yeah.
is out. Like,
Yeah.
we're shutting down shop. Here's your last check.
Yeah.
I remember it was $17,000. Here's your last check, brother. He offered me a job doing something else, making really good money, but I'm like, I can't do that. I'm getting engaged. I got to stay in Miami. So I had to make a choice, right? So I was like, man, what am I going to do? Then from 2007, January to, I'll say June 2008,
Yeah.
I was killing it.
Yeah.
I was killing it. I didn't know what was going on. Everybody was so scared. So I was like, bro, like, when I used to do maybe 3-4 files a month, I went to like 15, 17, like insane.
Hey, can you imagine? 15 files a month?
Yeah, it was insane. So now, but I got to use that to live that life, and then the market crashed, right? Right before that, I learned the lesson that I was able to beat out anybody else in any market just because of my mindset.
That's
Okay.
what's up, man.
Market crashes 2008. I quickly adapted, and I went to collections, whatever.
Yeah.
But I'm like, what everybody's negatively doubting, like, most people spend most of the time in their head,
Yeah.
Yeah.
right? And that's what most people's flaws are. Like, in your head, you're stopping yourself, you're doubting yourself, whatever. I don't even care. I just put my head down and I work. But I learned that from that time when everybody was suffering. I wasn't just doing 2 and 3 times better. I was doing like almost 10 times better than everybody else. Right now, last year was my best year ever, by the way.
Right.
How many people you heard saying 2020?
No, I haven't heard anybody say that.
Like, this was my best year ever. Why? Same philosophy. Like, I see the opportunity.
Okay.
While you're thinking about the doubts, while you're thinking about the problem, while you're thinking what's going to happen, while somebody's trying to look for the next exit, I said, no, I'm doubling down.
So fear is a mind killer.
That's
You know,
it.
people are fearful of doing most of what they really want to do in life.
Yeah.
Yeah.
They're just afraid. Oh, I don't have the right contacts. I don't
gotta
have the
wait.
right education. I
I'm
don't
not
have the
ready.
right. It's always some sort of excuse.
So to complete the thought, this kind of, it's a segue, but goes into the new thing, just bold mortgage. So I'm making a bold statement, a bold move in any market.
And you will loan.
Yes, and I
There it
will
is.
loan, right?
I will loan.
But we launched bold mortgage this month,
Love the concept.
right? And it's the best of everything in one place. All the loan programs. I'm talking from broker,
Is that an
correspondent
investor's paradise?
lender. I'm sorry?
Is that an investor's paradise to come to your office?
Yes, it is. Investor, everything. Like we have every product that you need, but guess what? We're still underwriting. So we get